topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. Man, if you were just on Ask the Experts here just a little while ago that we just finished talking about, tax relief, IRS problems, innocent spouse, business taxes, you name it. We're talking about it with Steve-O on Ask the Experts. We get to do sometimes that show right before this show, so we have a lot of fun in talking about solving people's tax debts and helping people. Here today, I wanted to just take a complete step back because we've talked about this over the years that we've been doing Tax Talk for You, and I think we did Solutions 101, 102, back a year plus ago. You can go look at those on podcasts at iHeart and Spotify, Spreaker, you name it, they're there. Or you can just go to Tax Talk, the number 4 letter U.com, and you can find all our podcasts over there as well. But you're taking a step back and going, hey, let's do Tax Relief 101. Tax relief from the beginning. When here at Taxation Solutions, we talk about tax relief, it isn't the same way other people talk about tax relief. It's not, hey, everybody should get a offering compromise. I mean, I've seen these companies out there that, they'll go through and go, basically kind of like Oprah Winfrey, did years ago, hey, you get a car. No, you don't get a tax offering compromise, and you get an offering compromise, you get one, you get one, you get one. Well, you've got to qualify for the different relief programs that the IRS offers, and then you've got to know how to use the tools at our disposal, and even tools that are at your disposal to find the proper path to tax relief. So people ask me, hey, where do you start? When you come to Taxation Solutions, what we start with is a tax analysis. We go and pull all the records from the IRS, and we decipher and look at all these records. Did they send out the proper letters? Did they do it in the proper timing? Have they filed the final notice of intent to levy? When did they do that? Are you subject to levies at any time? Have they filed a lien on you? Is the debt correct? Have you reported correctly over the last, 3 years, 7 years, 10 years? Did you file all your returns for each of the years? Are there any SFR, substitute for returns? What have you been paying in? Are you on a non-collectible status? Are you on an installment agreement? What status does the IRS have? Do you have a revenue officer appointed? All the things we've got to look at to determine, hey, what's going to be the right route for you? So IRS has a lot of legitimate tax relief programs that are what they say are designed to help taxpayers who cannot pay your tax debts or need to resolve outstanding tax liabilities. So they offer these different programs, but which ones should you be using? Which ones should you qualify for? And, when you're using these tools, we'll say, you've got to know how to use them properly. And you need to know what are the different tools that are available for you as a taxpayer who owes money. So there are basically what the IRS says are 4 primary pathways to settle, pause, or structure your payments or get rid of your debt. And you've got to know which one's right for you. We had a question in from BB. Isn't the road to the IRS the same for everyone? Well, the road to get there is the same for everyone, but the path that you follow will depend on you and your situation, just like it does for everyone else. And you got to know how to take the right path off that main path through one of those 4 type programs that the IRS has. It's not everybody gets an offer in compromise. It's not everybody gets a full pay installment agreement. Everybody's situation is different, and everybody's situation can depend on a lot of other factors. That's why we do that tax analysis to determine, hey, what is the right path? Because if you look, what the IRS is going to say, the IRS is going to say, hey, installment agreement, offer in compromise, non-collectible status, partial pay installment agreement. Those are the paths that the IRS is giving you. But does that path actually lead you to the right thing? So we can diverge off this path that the IRS has given you for those 4 primary administrative pathways to settle your tax debt. And when we're doing that tax analysis, we are looking for what we can do to help fix your debt. Now, what does that mean? Well, that means first thing, we got to make sure everything is filed. So if you have not filed returns, then we've got to make sure you filed all the missing returns for the last 6 years. That's what the IRS is going to require. Now, if you haven't filed your 7 back, 8 or 9, and they filed SFRs for those years, we want to look at those returns as well and determine, should we be filing those returns to correct the debt that the IRS has on you because they filed an SFR, substitute for return. So we look at that. That could even go back even more years beyond that, because if you haven't filed for years 12, maybe 13 years back, and they filed an SFR, the debt does not go away till 10 years after that return was accepted. So you may be on hook for a lot more liability than you think. So, these are the things that we're going to be looking at and addressing as we go through. And we're going to take questions, and I'm going to try to put these in where, the questions you're asking kind of fit. Lawrence, appreciate your question. What makes the cut to qualify for tax relief help? Well, everybody can qualify for tax relief help from Taxation Solutions. Now, does that make everybody's solution correct? The same? No, everybody's solution is going to differ. There are times we're going to talk to you, we're going to talk about how much money you owe. If you're owing less than $10,000, you probably don't want to pay for the tax help because there may be a solution you can do on your own, and we're going to advise you of that as well. If you owe more than $10,000, then our services are going to be more than worth it, and will help hopefully save you money and put you on the right path. So we're going to go through that with you when you call us at Taxation Solutions at 888-930-1016, provide you the help and the assistance you need to help determine, one, whether you should use our service or not, two, what kind of relief we are thinking you can qualify for. We will then finalize what kind of help you're going to get once we complete the complete tax analysis on you to determine, hey, what is the full debt and what all can be done after that is done as well. Cliff, hey, does the IRS offer the best way to settle, or do you need someone else to help? I find it funny because the IRS is about collecting money. So they're not offering you an offering compromise. They're not going to prepare that offering compromise for you. They're not technically offering you a partial pay installment agreement. They're not offering to put you in non-collectible status. They are offering to collect all the money possible from you. So you make that determination. What do you think they're trying to do? Biggest, baddest collection agency in the world? I think, yeah, if you want to go it yourself and pay, great. If you want to use somebody to get you the best deal, then it's taxationsolutions.net. Now, that being said, we're going to advise you if you're only going to qualify for a payment plan, then we give you that advice and we tell you, hey, this is what we're looking at. A lot of offering compromises don't get accepted. Took a class on offering compromise, how many get rejected. And man, there's a great number of people that get rejected. Small percentage of offers are accepted because they're filed incorrectly. So whether they're filed by another company or they're filed by individual taxpayer, they get rejected because they're filed incorrectly and they have the ability to pay. Now, when we determine that, that's why we set up that installment agreement, whether partial pay, full, or whatever. We go through and do that analysis to determine, hey, this is where you need to go. So I do recommend getting somebody on your side that's going to represent you, that is going to be in communication with you like we will, and get you that best deal that you can possibly get within those 4 pathways that the IRS has. Now, again, we diverged off that pathway because returns weren't filed. We got to get those returns filed before we can swing back to that pathway to get you to that solution. Maybe we go in and we've done that tax analysis and we find out the IRS is wrong. And so we get the IRS corrected. Maybe they did an audit, but you never had representation on your audit. We then diverge off the path and we do the audit reconsideration so that we can bring it back down to the right amount of debt and then go down that path to get you that solution. Maybe they assessed penalties or did something that was incorrect. We get that corrected and then get back on that path. So this may be a path that everybody takes, but that path has many, many diversions. Man, you're sitting here talking with your hands and you drop the mic. I guess it was a mic drop moment. Anyway, when you are sitting here and looking at it going, hey, there's only one way to go. No, there's many options to put the solution in place to get you to that point. Now, when you're going down this path and you filed all the missing returns, now we can start moving down that pathway towards what's the solution is going to be. So the first thing we're going to do is help you and get you to gather your monthly income, your bank statements, your credit card statements, your 401k, investment statements, mortgage statement or your lease, utility bills, food costs, all this stuff, and any other assets that you're going to have. Making sure we're also dotting the I's and crossing the T's on basic living expenses. Maybe you have hospital expenses that you're currently on a payment program paying. Maybe you have high cost prescriptions you're paying for every single month. We're going to gather all that information from you to help determine now which of those 4 pathways off the main road that you're going to take. Now, the simplest one, and then one the IRS puts you to go through, is the full pay installment agreement. Now, that full pay installment agreement, hey, that works great for the IRS. To be honest, I mean, if you can afford to pay it, pay it. Because the IRS isn't going to give you a deal if you can actually afford to pay it. Sorry, that's just the way it is. People go, this isn't fair. We hear it all the time. It's not fair. Just because I have money, I've got to pay. Yeah. It's just life. That's just the way the IRS looks at it. And if you call the IRS, that's the fresh start they want you on. They're going to tell you, hey, this is based on what you owe, based on the number of months left in collection process. This is how much money you've got to pay. Maybe it's $1,000, maybe it's $200, maybe it's $5,000. I don't know. Depends on how much debt you have, how much time you got left. And then you tell the IRS, I just can't afford to pay that. All right, let me think about it. They give you 30 days, 20 days, 2 weeks, whatever it is. And you don't do it, and all of a sudden they levied your bank account, and you go, but I was working on this. Now, you were sort of working on it. The IRS was working harder and faster than you were. And what they want is your money. That's it. They don't care about anything else. You know, maybe somewhere down the line, they want your house. They want your retirement assets. But it's all about getting the money and getting paid. So, you know, you've got to go through and work through the Form 433. Now, 433A is all about you personally. If you're running a business, you file a 433B as well for your business expenses and business income. So if you're self-employed, or maybe you're running an LLC or a S Corp, they're going to want to know about your business as well and all your income. So you're going to fill out that 433. That 433A is going to say, hey, this is my W-2 income, how long I've been on the job, if your spouse is working, their W-2 income, and how long they've been on the job, what property you own, and what is your value. We use values through Zillow, but you can find your value on your home. Then they're going to want you to list all your vehicles. So they're looking for every vehicle that is entitled in yours or your spouse's name. So they're looking for assets. Now, what other assets are they looking for? I'll tell you what, let's continue covering what assets they were looking for right after we take a short break, and we'll come back and talk about all the other assets the IRS is looking to find that you may own. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. I had two great questions that came in here while we were at break. Basically, now we got three great questions. So I'm going to address these questions before we get back to talking about assets that the IRS is looking for. Jennifer, she was asking, if you provide the IRS proof and documentation, can they deny a correction? Absolutely. IRS can do pretty much anything they want when you're filing a correction. So yes, they can deny it, but when they do deny it, you do have appeals rights. So if you use those appeal rights correctly, a lot of times you can win in appeals, showing that you have proof and documentation to get those corrections made to the tax return. And they only deal with the things that are denied. So we don't bring in any other information, nor do they. They just look at the corrections and then will either accept them or deny them at that point. And then you have further appeal rights into tax court if it's worth going through and doing. Sometimes it is, sometimes it isn't. We helped a client. Now, we don't represent people in tax courts because we're not lawyers in tax court. We are enrolled agents, which we deal with. We are licensed professionals to represent clients to the highest levels of the IRS. We did help a client who was going through an audit. The auditors denied everything, came back with a judgment of well over $100,000. We advised him to go to tax court. He wanted to go into tax court himself, so we helped him with the documentation of everything he needed for support, and actually represented him in mediation because it was outside of court, and we won and actually got him the IRS not only to reverse what the IRS was saying, keep the corrections the right way, but then the IRS agreed on some other corrections in tax court and actually refunded our clients an extra $100,000 back to him. It was a beautiful day for us, beautiful day for him. So yes, the IRS can deny it, but you do have all those appeal rights. Penny was asking, what if you were not married and someone put your name on their taxes? Well, the first thing to do is to file your own tax return. And once it's rejected, then we will appeal to the IRS saying that, hey, you were not married. Now, if you were common law married or you were living together, maybe you filed that way previously, we would have to look at all that behind it. But you would go through the process of proving that, hey, you're filing your own return and that person should never have claimed you. And you can claim fraud on that as well. And then we also ask you to put identity protection through the IRS. So you'll get an identity protection PIN from the IRS every year, so nobody could ever file for you unless you give them that IP PIN number. So keep that in mind. And then Jeremy was asking, how do you avoid tax relief scams from tax relief companies? Well, what we tell people is there is no single company that can promise you a specific percentage of debt reduction or promise you a offer and compromise right up front. So somebody promises you that, hang up the phone and run. If you're looking at, hey, installment agreement, yes, we're going to be able to get you an installment agreement. We don't know necessarily what it's going to be. If, when we're sitting down and talking with our future clients, we gather a lot of information, try to do a tax analysis so that we can actually tell you what you're going to qualify for before we're ever going to charge you for the solution. So, when we go through that, as long as you're 100% honest with us, then in the tax analysis, we can then put together what the solution is going to look like. Now, sometimes that changes because life does change, but those changes are usually, hey, we had a client who went from earning, $40,000 a year, could really qualify for a non-collectible or possibly an offer and compromise. I don't remember exactly, but then he got a better paying job. And now all of a sudden, the only thing he can qualify for is a sort of payment arrangements, albeit he wasn't still making enough money to do anything full pay. So we put him in a partial pay installment agreement to get him down the road and get some of the debt falling off and not pay 100% of it back. So there are different tools out here to be able to get, the right solution. And we've got to determine what the right solution is and making sure that you're dotting your I's and crossing the T's. So, if they're guaranteeing something right up front without a written guarantee, if they're just telling you what you want to hear to get you signed up, which I've seen that happen a lot of times. Oh yeah, you'll qualify for an offer in compromise. They didn't give you a guarantee. They may have said possibly, probably, or something like that. And you fell for it. Read the agreement before you sign it. It generally will tell you this is only possible or probable or dependent on the IRS. And that's just the way it's going to be. Now, if we've done a tax analysis and we are 90% positive we can get an offer accepted. Now, you can come in with something extra you didn't tell us before. Yeah, it could throw a kink into things. So, all right. So tax relief. Talking about assets, what else are they looking for? Anything else you own. So maybe you have multiple cars, maybe just two, yours and your wife's, but then maybe you got your kids' cars and you bought them, they're in your name. Well, if you're going for an offer in compromise, they count as assets. So you need to file those as your assets. They have a value. Looking for artwork, jewelry, anything else that's really expensive, you would have to declare it. Cash, money in the bank, money in your 401k, IRAs, those things all count. Cash value in your life insurance policy counts. Any other property you own, even if it's inherited property, you're going to get it. They're looking for lawsuits that you may be a party of, that you may get settlements from. So all these things they come in to look at. And then you go through all your actual living expenses. Now, depending on the path that you go, if you go offer and compromise, they have national standards, which you're limited to. So depending on where you live, you have a limit for housing and utilities. You have a limit on food, clothing, general maintenance. You have a limit on your car payments, your car insurance and fuel. You have limits on medical and what you pay out for medical. What you pay for medical insurance, if it's off your W-2 or off your marketplace, you're able to claim that full amount. And then it gets down to net off of what yours and your spouse's income is. So if you're filing for an installment agreement, then they're going to be a little bit more liberal and allow everything that you're truly paying out. You got to be able to support it if they ask, but they allow the true expenses, for you. If you're going for an offer and compromise, you're limited to those national standards. Anything above those national standards is not allowed. So if your house payment with electric, gas, water, cable, phone, and everything is higher than the national standard, which in most cases it is, everything above the national standard is going to be disallowed. So you may look, based on what you're saying to somebody, like you would qualify for an offer and compromise, but until you apply the national standards, you don't know. And so if you're running a business, then you're filling out the 433B. And basically what it does is, again, it lists all your assets, everything the business owns. And they're going to look at actual value. They're going to look at purchase value. And they're going to look at what equity you have in those assets, whether it's vehicles, machinery, equipment, inventory. All that is what the IRS is looking at. Financial statement, again, you're going to go down your financial statement. Here's your total income. So basically, you should have a profit and loss from your business, and that profit and loss should have your total income and maybe cost of goods sold or cost of services, and then all your general and administrative expenses, and come down to a net income. Now, there's no national standards on this side, so if it's business, it's business. Now, they could come in and question some of the expenses because it needs to be ordinary and necessary business expenses. Or they could question like telephone. Maybe you have telephone over here on the personal side and you have the same cell phone over here on the business side. They could disallow things like that. So it's been seldom that I see it, but sometimes when they don't believe the information, they want to get the corrections for you and get that done so that there are no issues when that comes up. So once we complete all this on our financial worksheets in the 433A, 433B, we start running it through our simulators and our knowledge database and come up with what's going to be your best solution. So we went in and filed the returns, we fixed returns, we did audit reconsideration, we got it back down to the numbers the IRS should have. Maybe we got some penalty abatement, and now we're at the phase of choosing which of the 4 paths we're going to take off the main roadway. So that's where this all comes to a head, from the tax analysis to moving down the path to a solution. Hey, Randy, you had a great question here. Can a deal change as circumstances change as times go along without penalty? Well, it depends on what deal you're talking about. You're talking about a deal with the IRS, or you're talking about what deal you have with your representation company. If your deal with your representation company is such that it is a total solution, doesn't matter which path they take, they usually we would stand behind that kind of deal to take you down the path of, any one of the 4 forks that are out there. But if we have determined that, hey, we're going to go to installment agreement, or we're going to go non-collectible, and then we determine that, hey, no, you can go offer and compromise. Yes, that deal may have to change, and there may be additional prices on that because we're going down something that takes a lot more work and a lot more time. If you're talking with the IRS, again, it depends on what deal you're talking about. If you're talking offer and compromise, no, that doesn't change. Talking about an accepted partial pay installment agreement, no, that doesn't change. Talking about non-collectible status, yes, that would change. There's no penalty, just the deal changes with the IRS. If you're talking about an installment agreement, as long as you're making your payments on your full pay installment agreement, there's nothing that needs to change with the IRS. So realistically, if your circumstance changes and gets better, then you don't change anything except if you're in non-collectible status. But there's no penalties with the IRS for it. Now, if you don't stay in compliance on an offer, yes, that all comes back, and then we go through that from there. So we'll take a look at all that and determine what's going to be the best way. So we're at the point of choosing the path and finding your solution to your problem. Now, we're going to start with that first path, full pay installment agreement. This is what the IRS really, really is looking to have you on. You can apply for this. If you can pay it, you can go right online for most debts and apply at irs.gov and get a full pay installment agreement. The IRS will even offer you a 180-day short-term plan if you owe under $100,000. So within that installment agreement, you have a second option. You can say, hey, I'm going to full pay in 180 days, 6 months. If the debt's under 100,000, they're going to bless it and say, okay. Now that could be shortened if you've already used some holds and everything out there. So they may not give you the full 6 months, it may be 4 months or something like that. And then they'll put you into a long-term monthly payment plans. if you owe under 50,000, and you can generally do those through, like I said, irs.gov, or you can call the IRS and say full pay. They'll determine the amount and give you what the percentage or the amount is, and then you'll pay it over the life of the CSEDs of the debt, or until the debt is paid off. So that's your installment agreement. Now, if you owe more than 50,000, then the IRS is looking at financial information. Now, the financial information, if you're going more for full pay, is going to be like a 433F, which is a smaller version of the 433A, which isn't looking at each individual line item out there for mortgage, utilities, and household costs and stuff like that. It's going to be kind of a brief one that take over the phone and then say, okay, yes, you can be in this full pay installment agreement. But within that installment agreement path, then you have the big divergence out to the partial pay installment agreement. Partial pay installment agreements means you don't have enough money to pay on this debt every month. But yes, you may have some assets that you own that could be used to pay the debt. The IRS, if they haven't already, either case, are going to immediately turn around and file liens against you and your property. But a partial pay installment agreement is where you're going to agree with the IRS that you can only afford to pay X number of dollars a month for the next however many years till the statute of limitations run out or the debt's paid off. The advantage of that is, and sometimes we use that in lieu of offers and compromise, is that maybe you pay 100 or 200 or 400, 500, whatever the number is a month. And as you go, the statute of limitations runs out on some of the tax debt. So you may have statute of limitations that run out in the next couple of months on some debt. We put this partial pay installment agreement, and maybe you owe 10 or 20,000 from 10 years ago, and that debt will fall off here maybe at the end of the year or October, and we have no choice but to put you in a partial pay, and you start paying that small amount every month. And over the next 4 months, that debt falls off. You just saved yourself $10,000, $20,000, whatever that number is. And the next year, if you've been filing on time, the next year more debt's falling off, and you would only pay that, let's say $200 a month for the next 12 months, so $2,400 on another $10,000 or more of debt, and that falls off. Then the next year you may have the same money falling off, depending on what the debt is, or a lesser amount, and you may pay that year on full over the next year, whatever that number is. And then you may get 3 years down the road or 4 years down the road, and all the debt has fallen off because you didn't have any current debt within the last 5 years. Then you're free and clear. So that works. No restrictions. We've just got to make this work and make the numbers work to get into this partial pay installment agreement. Now, if you truly can't pay, a lot of times we go into what they call is CNC, currently non-collectible. Now, we're going to talk about what is considered currently non-collectible by the IRS and how you get into this plan and how long it stays right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Welcome back. Hey, before we get into talking about non-collectible status real quick, I had a question from Larry that says, what if I received an IRS notice or letter? First thing that I want to tell you to do is open that letter and read it. It may just tell you have a balance due. It could just say your refund's changed. Maybe that I have a question about your return. It could be, hey, we need to verify your identity. That could happen like, with Penny here, who somebody else filed on their behalf. So when you file your return, they may want to verify your identity. It could be just as simple as we changed or corrected your return, or they're delayed in processing your return. So whatever notice you get, open it, read it. Make sure you understand it. If you got a preparer or somebody you're working with, get it to them, let them review it and read it with you. If they're asking you to take some kind of action, then you should address that. If you disagree with the notice and what it says, include information or copies of documents to review, for them to consider your dispute. If you have an amount due, pay it if you can afford to pay it. Quit getting penalties and interest on the amount due. If they changed or corrected your return, verify. Are they changing it or correcting it correctly? Send it to your preparer. Let them go through and work on amending your return to see that the IRS is correct in what they're doing. They've been known to make mistakes. So, review it, follow it, answer it, deal with it. Don't just put it in a circular file. If it's a final notice of intent to levy, then guess what? You ignore it, and the IRS is going to levy your bank account. All right, non-collectible status. It is a temporary pause of all IRS collections except sending you letter after letter. They'll still send you letters, sorry. If they grant this, it is saying the IRS agrees that you could not cover your own basic living expenses. Penalties and interest still continue to accrue while collection is paused. They're not stopping debt collection or penalties and interest on your debt. They're only stopping the debt collection. How long does this status last for? 1 to 2 years typically. However, if your income situation has not changed over 2 years, they will continue to let that roll longer. If your income goes up by any kind of measure, then the IRS will come back and revisit non-collectible status with you. You will have to prove once again that you should be in non-collectible status. So we've gone through all those, but everybody wants the pipe dream, right? Small percentage qualify. And that is an offer in compromise. This is where you settle your entire tax debt for less than you owe. It is open to any taxpayer, but only if you're facing hardships or severe equity limitations. So your income can't be very high. You can't have a lot of equity in your properties. You can't have multiple properties as well. You can go on irs.gov and go to their IRS pre-qualifier tool. I see people qualify on that. They come to me and say, hey, I'll qualify. And I go through their financial situation and went, you don't qualify based on this. Well, I just wanted to put an answer in to see. Okay, fine. That's great. Glad you did that and tried it, but does it make it right? Not necessarily. Did XYZ tax relief come in and say, hey, you qualify for an offer in compromise, but they never asked you any questions and didn't ask about your equity in your home? Not much less did they ask you how much you were earning and what you were spending. And then didn't apply national standards to anything, and they went, yeah, here you go. And then you get into it and they call, oh no, I'm sorry, we got to change this, or we filed, but they rejected it. And now we've got to go to a installment agreement, and you end up in a full pay installment agreement, but you paid a lot of money to get that offer in compromise that you didn't qualify for from day one. So things like that, you got to watch. Now, what else comes along with that offer in compromise? One, when you file for an offer in compromise, you file that 656, 433A, 433B, and then it goes to the IRS. And when the IRS receives it, they make a note of it and they immediately stop all collection activity. It's frozen. No, it does not mean penalties and interest don't continue to accrue. They do. But collection on the debt is stopped and frozen for as long as the offer is out there. Now, the IRS eventually get around to processing that offer. When they get around to processing that offer, what are they going to do? They're going to go in and ask for updated proof of income, expenses, mortgage statement, pretty much all the financial data, and any questions they may have. If you have not made your estimated tax payments and you're required to do so, they are going to require them to be made and caught up to date within a week or two of when they call and tell us, hey, you did not make your estimated tax payments, even though we've already told you to do that. If you haven't filed a return and there's no extension, you would have to file it almost immediately. They're going to make sure you're in compliance. But that doesn't stop there. If the IRS does come back and accept your offer, you have to maintain 100% compliance for the next 5 years after they accepted it. Now, compliance started when it was filed, and compliance ends 5 years after accepted. So it's very, very hard to see what is going on and knowing that you've got to do all this stuff. And then you think, oh, I filed it, but I really wasn't aware that I had to do all that. So you got to be in compliance, or they send the offer back, not accepted, but rejected. And we have seen that from other companies many times. We've seen it a few times from our clients because they just generally don't want to be in compliance. So we always try to make sure that people are dotting their I's and crossing their T's to get in compliance and stay in compliance to make sure that offer gets accepted where we feel 100% this offer would be accepted. If you spend all the money that you were going to put on the offer and don't have it, well, they only give you so much time to do it. So you got to have the ability to get that money from somewhere to pay that offer, or the IRS, if you don't make the payments within that period of time, IRS will reject that offer as well. So you got to make sure you're dotting your I's, crossing your T's, and have the ability to honor the offer that you're setting forth to get these things done. Wow, time flies when we're having fun. We've done 2 shows back to back. We did Ask the Experts at 9 a.m. Eastern time, and then we followed this up with Tax Talk for You right here at 10 a.m. Eastern time on W4CY Radio. You know, we get to have the fun of talking about tax relief. This is Tax Relief 101. If you know somebody that is in debt to the IRS, this is probably the great program that you need to refer them to. And you can tell them to go to taxtalk4u.com to watch this program, see the different relief programs that the IRS offers, and what we can do to help you put a solution to your tax problem. If you need help, call Taxation Solutions. It's 888-930-1016. Again, 888-930-1016 to get the solution that you qualify for in place to save you from the IRS. Or just go to taxationsolutions.net, put in your information, and we'll be giving you a call back as soon as possible. Hey, I thank you for listening. I hope everybody that's listening has a God blessed and very glorious week. Enjoy what you do. If you have tax debt, call us. Let us get it done. Let us put a solution and let us solve your problem. We'll see you in here next week at 10 a.m. Eastern Time on W4CY Radio and Tax Talk, number 4, letteru.com. See you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.